Get in! Another two-bagger. Morgan, I'm telling you, you're missing out. This quantum cat token is the future. You're there staring at your boring cable charts. I'm out here printing.
Pipe down, you muppet. You're up, 50 quid, and you're acting like you're Zuck on launch day.
Hey?
Let me guess. You haven't sold a penny, have you?
Well, no. It's got more to run, innit? You got to let your winners run. That's the rule.
And that, right there, is why you're still shopping in the reduced section. That's a classic rookie move.
Okay.
And it's exactly why we're talking about what separates the gamblers from the pros today. CMT-level thinking.
All right, Miss Big Shot. What's this CMT blah blah free thing you keep going on about? Sounds like something my dad would trade. Bare serious.
It's Chartered Market Technician, Level 3. And yeah, it is serious.
Right.
It's the final boss of TA. It's where you stop just staring at one chart and start integrating everything. It's the difference between playing Sunday League and playing in the Champions League.
Champions League, eh? Bit of a stretch. All I hear is boring. My game's fast, high risk, high reward. That's the crypto way.
And that's why your P&L chart looks like a heart attack. The first thing CMT thinking drills into you is behavioral finance. It's basically a manual for how your own brain is actively trying to make you broke.
Go on then, psychoanalyze me. Tell me why I'm a mess.
Okay, simple one. Recency bias. Your last trade was a winner, so you get cocky. You think you've suddenly cracked it, that you can't lose.
Yeah.
So you up your size on the next trade, get sloppy, and the market smacks you right back down to reality. Sound familiar?
Are you watching me trade? That is literally what happened to me last Tuesday.
Go on.
I made a bag on some AI coin, then aped the lot into a new dog coin and got absolutely rugged.
Exactly. A CMT-level trader knows that bias exists. They don't trust their feelings.
Right.
They trust their system. After a big win, they're more cautious, not less. They know the universe is about to balance the books.
A system. See, that's where you lose me. Trading's a feel and art. It's vibes.
That's what people who lose money say. A system is just a set of rules, a recipe. Let's say your system is, I only buy stocks above the 200-day moving average when the RSI is oversold, and I risk 1% of my account with a stop loss below the recent low.
Okay, that's a lot of words.
It's your logic written down. You build it, and then you backtest it. And not just scrolling back on the chart like you do.
Right.
You run it through software over 10 years of data and find out if it actually works. Does it have a positive expectancy? What's its biggest drawdown?
So you're telling me you know before you even trade how much you could lose? That feels like cheating.
It's not cheating. It's preparation. It's what professionals do. You'd never see a pilot take off without a flight plan. But traders like you jump into the market with no plan and wonder why they crash. It turns you from the gambler into the casino.
Turning me into the casino? I like the sound of that. But my world is different, Morgs. Crypto's all about narratives, influences, that mad energy.
Is it, though? That's where the next bit of CMT thinking comes in.
Okay.
Intermarket analysis.
Okay.
The idea that everything is connected. For me, I never trade the euro without looking at what the dollar index, the DXY, is doing. I don't look at tech stocks without seeing what bond yields are up to.
Ah, I'm with you now. It's exactly the same in my world. It's like when Bitcoin's in a screaming uptrend, you can buy any old tap coin and it will probably pump.
Yeah.
But as soon as Bitcoin coughs, the whole market gets pneumonia. So watching Bitcoin is your DXY.
Precisely. It's about context. A CMT-level trader is looking at the whole board. They're not just staring at Dogecoin.
Right.
They're asking, okay, the Fed just hinted at cutting rates. That's probably bearish for the dollar. A weaker dollar is usually bullish for risk assets like the NASDAQ. And Bitcoin, therefore, the risk-on mood might be good for my altcoin plays. See? It's a chain of logic.
Right, so it's not just one domino, it's the whole line. That's actually pretty smart. You're basically front-running the normies who only look at one chart.
It's about building a complete picture. which leads to the final bit, portfolio management. You stop thinking in terms of one trade and start thinking about your book.
My book?
Yeah. How do all your positions work together? Are you too exposed to one sector? Are all your trades correlated?
You mean like having 5 different Solana-based meme coins and thinking you're diversified?
Exactly that. If Solana has a network outage, your entire portfolio gets sloped. That's not a portfolio, that's a death wish. A pro thinks, okay, I have some long equities, I'm short a currency pair to hedge my dollar exposure, and I've got a small speculative position in crypto. They're building a balanced team, not just a team of star strikers.
So let's bottom line it for the people. How does all this CMT thinking actually make you a better trader, not just sound like a know-it-all?
It's about survival. Simple as that. It stops you from making the catastrophic emotional mistakes that wipe people out.
Right.
It forces discipline. Your equity curve becomes a smooth, steady climb instead of a roller coaster. You're not trying to hit a 100x home run. You're just hitting consistent singles every single day. And that's what makes you rich in the long run.
All right. You've convinced me it's less about being a genius and more about just not being a complete idiot. It's about making sure you've got chips left on the table to play the next hand. That's a bit of me still.
It's everything, Chris. It's the whole game.
Right, that's enough big brain stuff from Morgan for one day. My head's hurting. If you lot want to keep the chat going or just come and take the mickey out of my quantum cat bag, the link to our chat group's down below. And look, if you want to say thanks for Morgan's massive brain dump, sign up with our SexRef link. Costs you nothing, helps us keep the lights on. Hop in and have a laugh with us. Sorted.
We'll leave you with this to chew on.
Yeah. So the question for you lot is this. When you place a trade, are you executing a tested system with a known edge? Or are you just providing the exit liquidity for someone who is? Have a think on that. Laters.